We are half an hour from the Open in Hong Kong, Shenzhen and Shanghai. You're watching the China Show. I'm Heidi Stradwatts in Sydney.
And I'm Annabelle Drawlers in Hong Kong. Our top stories. Well, President Trump flips the switch to risk off by announcing plans for a 35% tariff on Canada. The loonie slides while Asian stocks pair their gains. Chinese Foreign Minister Wang is set for a first meeting today with his US counterpart Marco Rubio, potentially paving the way for a summit between Trump and Xi Jinping. And chip stocks in focus as Nvidia's Jensen Huang is said to meet with President Trump ahead of the CEO's planned trip to China.
Well, amidst the ongoing uncertainty when it comes to trade, we're getting a few more nuances when it comes to this latest levy on Canada. President Trump is set to keep the tariff exemption when it comes to the application to USMCA goods, according to a US official. This after the announcement that he would impose a tariff of 35% on Canadian products starting on August 1st in a memo posted to Truth Social, saying that that tariff is separate from all sectoral tariffs. There would be no tariff if Canada decides to build or manufacture products within the US. But now we're getting some clarification that the USMCA goods are exempt from that additional tariff that was announced just over the last hour or so. And Belle, we very quickly saw that market reaction when it comes to the loonie, how the rest of the market's faring with this latest trade missive.
You know what I find so exceptional is that all week we've been saying markets are looking past the tariff headlines. When things sort of seem to have calmed down, President Trump isn't on his social media platforms, but then he posts something or he does an interview like he spoke with NBC, and suddenly the calculus just changes in an instant. And we've seen that this morning because, as we said, Asian stocks have been pairing their gains. We've seen the dollar also moving off this. So clearly traders are extremely sensitive to all of these negotiations. And you see that, as I said, being reflected this morning, because you've seen that bit of a drop in US futures, even though we had a very strong session overnight, and a lot of focus, of course, particularly on the tech space again. We had that report of Jensen Huang meeting with President Trump, for instance. What are they going to be doing in the China market? Plus also watching, of course, earnings and the reaction there, TSMC, for instance. But that's the state of play as we look ahead, of course, to what exactly awaits Chinese markets as they come online this morning. But let's stick with that top story, this bombshell that President Trump has announced with his plans for a 35% tariff on Canadian goods from August 1. Our news desk editor Jill Deeses is with us. So Jill, I mean, this sort of like is definitely a very fast evolving story.
It is a very fast evolving story. It's an escalation, but I do want to make clear that those breaking lines that we have just now, looking at the fact that the USMCA, that the trade agreement between the US and Canada and Mexico, that those goods aren't included in this 35% tariff threat, I think that's really, really important, because what that ultimately tells us then is that what Trump's ultimately doing, it appears, and again, I have to caution, this is a very quickly evolving story, but what that does mean potentially is that this is essentially a 10% tariff increase over a group of goods that were covered already with a 25% tariff. So if you recall back earlier this year, that's that set of goods that Trump has threatened, Trump imposed 25% tariffs over because he was citing the fentanyl crisis. That was a huge part of this story. So it appears that potentially what we're looking at here is an increase over that amount. Again, not affecting goods that were covered under the U.S.-Canada trade agreement. But I think in context with everything else that's happening with Trump this week, I mean, he's obviously sending out more, tariff letters to a bunch of the U.S.'s trading partners. He's really kind of stuck to this August 1st deadline. Remember, earlier this week, he was kind of waffling over, whether or not that was 100% firm. Now he seems to be charging toward, trying to play more hardball with places like Canada, with a lot of other trading partners around the world, and kind of setting up this idea of, want you to come to the table. Maybe there's still room to negotiate. I think that he's kind of left open the door a little bit with, some of his latest statements on Canada for how they could potentially negotiate more. But yes, obviously shows that it's a very quickly evolving story. And of course, we're not even talking about the fact that we've got all kinds of other tariffs that are in the works on, these 50% copper tariffs, obviously existing steel and aluminum tariffs. So really lots going on here. But I think it does show that, yes, tension still exists, certainly between Canada and the United States right now.
copper, potentially 200% on pharma, just throwing that out there earlier this week as well. We've also heard in this conversation with NBC that he's looking at 15 or 20% tariffs on the remainder of trading partners that I guess haven't been sort of named yet. He also called out the EU in that conversation. And we know that the EU is also still trying to lock in this 10% tariff level before August 1st, right? It does seem very chaotic at this point.
Yes, Heidi. I mean, it's incredibly head-spinning. But again, I think just really goes to show you that, Donald Trump is working very fast and loose here. I think the other thing, too, that you have to keep in mind is that when it comes to some of these tariffs, one way that, a lot of this does seem somewhat political or emotional, right? I mean, look at what happened with Brazil just the other day, a trading partner that actually runs a bit of a trade deficit with the United States. Trump really seized on, some of his dissatisfactions with the BRICS coalition, some of the comments that Lula was making about the United States. That's the Brazilian leader earlier this week. And then ultimately, some of Trump's feelings on the former leader of Brazil, Jair Bolsonaro. I mean, that kind of, led to him threatening these 50% tariffs on Brazil. So I think when you're bringing in to aggregate everything that's going on with, with Trump right now, obviously, also the threat of additional, sectoral tariffs, as you kind of mentioned there with pharmaceuticals. Yeah, I mean, lots of fast-moving parts. I think we're going to have to kind of revisit where we are at the end of the week, and then ultimately, I think, keep tabs on how all of this really evolves up to that new August 1st deadline that Trump has really set this week.
And what about as well, because he's put another sort of earlier deadline in, and this one's on Russia, and in this interview he also spoke about having a major announcement come Monday.
Yes, I think what we've really seen from Trump over the last, few days, certainly a little bit longer than that, is that, he's really soured, I think, a bit on Vladimir Putin. A lot of this kind of comes down to the fact that Trump is very dissatisfied with his reading that Putin isn't really coming to the table on a Russia-Ukraine ceasefire. The U.S. is planning to send, more firepower to Ukraine. And Trump, remember, back when he was running for president, and then ultimately when he got elected, he was, saying that he wanted to reach an end to this war within the first, 24 hours or so of when he actually took office. Obviously, that has not happened. And so we have seen a lot of that dissatisfaction kind of, breed with Trump over Putin. He's been saying that over the last several days. And so it does seem like, perhaps he's actually made a decision. Trump also likes to set up these little deadlines for himself. Remember, this is a, former reality TV show host, kind of setting you up for some primetime viewing there. So, yeah, it could be that we have something very significant coming on Russia on Monday that kind of tracks with what we've been hearing from Trump over the last several days.
Nothing if not making headlines all the time, right? Till Desis, Bloomberg News desk editor. And China's support diplomatically, economically, when it comes to Russia will be top of mind when it comes to Marco Rubio, the U.S. Secretary of State, set to meet with his Chinese counterpart in Malaysia later today. It will be Rubio's first face-to-face conversation with Wang as these Trump tariffs, geopolitics dominate conversations in Kuala Lumpur. Bloomberg's China correspondent Min Lo joins us now from KL. So what can we expect out of this meeting?
Yes, so this trip, as you said, the Marco Rubio meeting with Wang Yi is going to be the first one that they will have face-to-face. And of course, there are a lot of issues for the two sides to discuss, not just fentanyl and the export controls on high-tech goods, but also, as you said, Russia, now a main sticking point. Marco Rubio said that China has been doing everything it can to help Russia without getting caught. And this is the main issue that he plans to raise with China's Wang Yi. And this comes as President Trump has said he's planning to announce something major on Monday when it comes to Russia, possibly a sanctions package. Question is whether there will be secondary sanctions on countries like China that has been buying things like LNG, oil, and energy products from Russia. So that's a key thing. We're also wondering whether they will be talking about laying the groundwork for a potential Trump trip to China, because we know the U.S. had already started to gauge interest from businessmen, whether or not they will be willing to accompany Trump on that trip. But Marco Rubio didn't mention whether or not that is on the agenda for now. But certainly an important meeting to look out for, because the two men had a chance to meet in February at the sidelines of the UN Security Council meeting, and they didn't take that opportunity then. This time they will be meeting, and it will be interesting to see what the Chinese Foreign Ministry says about the meeting after the fact.
Min Min, we've also seen Wang Yi taking meetings with other ASEAN partners, other bilaterals as well. What's been the messaging from Beijing?
Yes, Wang Yi met separately with the Vietnamese foreign minister as well. And this is an interesting meeting to watch because Vietnam is one of the few countries that had already agreed to the tiered tariff levels with the U.S., 40% on transshipments, which is really targeting a backdoor for many Chinese exporters. It's interesting that Wang Yi had said that China is willing to work with Vietnam to ensure that the legitimate rights and interests of all countries are safeguarded. So interesting that given, despite the rhetoric from China about retaliating against countries that cut deals that undermine Chinese interests, the tone there appears to be still quite constructive. This comes as Marco Rubio is also about to meet with the Vietnamese envoy later today as well. Will they be working towards lowering tariffs even further or working out details about what exactly does transshipment mean? There's also the meeting with Japan as well. The envoy there urging China to ensure that Japanese companies will have access to rare earths. But again, some forward momentum as both sides reaffirm the commitment to lift that seafood ban and to start to slowly resume as well or work towards the resumption of beef exports from Japan to China. And again, Rubio as well going to meet with the Japanese foreign minister later today. This comes as U.S. and Japan has been really not agreeing very much when it comes to the trade deal, disagreements over rice imports. Japan now still has 25% tariffs from the U.S. and has vowed to keep negotiations going.
All right, Min Min, great stuff. We'll be back with you in the next hour. That was Min Min Lo there, our China correspondent. And we are counting down, of course, to the open of trade in Shanghai, Shenzhen, Hong Kong. Markets very sensitive to these latest announcements from President Trump around tariffs to come. You're seeing Chinese futures here looking fairly steady. This is The China Show. Happy Friday.
So we're not seeing a lot of tariff inflation yet. So for that reason, I've been arguing that we could start lowering the policy rate from our current setting. That given where the SEP, our Survey of Economic Projections, is, the policy rate's still pretty restrictive. So we could lower that.
It's going to take time for the tariffs to settle what people are actually paying and therefore how they're passing through. When we look at surveys, and these are publicly available surveys by several reserve banks, the expected time that companies are working with in terms of pass-through is something like 3 months after feeling the initial price increase, whether directly or indirectly.
Those were some Fed officials there on the outlook for interest rates. And I think that, yes, you've got that sort of perception or that idea that we're not seeing tariff inflation just yet. But at the same time, tariffs do continue to dominate headlines. And just in the last few minutes, we've had President Trump looking to levy a 35% tariff on Canadian goods. You've also had President Trump speaking to NBC News saying that he's looking at blanket tariffs of up to 20% on most trading partners. But let's get more on this now. Bring in Stefan Hofer, Chief Investment Strategist at LGT Private Banking Asia. And I saw you nodding there to what Chris Waller was saying, the Fed Reserve Governor, that we're not, again, seeing that impact passing through just yet.
That's right.
Talk to us about that. Why aren't we seeing it?
So a good estimate, I think, is probably for August or September in terms of the data releases on the official CPI reports. Up until now, the CPI reports have not really reflected very much. What's also worthwhile to mention is that import price indices into the U.S. are actually quite stable. And so that tells us that the exporters, say in Vietnam or China, wherever else, are not eating the tariff. They are selling their goods into the United States at the prevailing price that they were before. So that sort of, again, reinforces that we will get a tariff bump in terms of CPI, but probably for us as investors, we have to wait till August or September to see that in the numbers.
I think what's been sort of a bit difficult to understand as well, is it going to be sort of a one-time impact?
Yes.
Or does it sort of unanchor or disanchor longer-term inflation expectations?
Absolutely.
Yeah, so what happens?
So if you look at, say, for example, University of Michigan sentiment surveys, forward-looking 5 years out, households are already saying that prices are going to go up. So there is evidence that you can say that inflation expectations are moving up in the wrong direction. I mean, to talk about rate cuts in that kind of an environment, very, very tricky. Also, obviously with the June labor market report, unemployment is only 4.11%. It's a very low level of unemployment by any measure. So to speculate now about a rate cut is really tricky, with the exception that we have political pressure from the White House that obviously they want rate cuts done yesterday.
There is the question of whether the transmission mechanism means that if they are waiting to see evidence in the data, it might be a little bit too late, right? Particularly as how easily entrenched inflation and tariff expectations can be. Do you think that's a risk?
It is a risk, but I think, frankly, we are in uncharted territory. We've never seen anything like this. There is no playbook for this. We've gone from an effective import tariff President Trump's second presidency of just below 2% to the Liberation Day 27%, down to, it's a moving target. And these kind of distortions are very, very difficult to map out and to model where we land finally.
You're constructive on European assets and both equities and the euro. That market has really been bouncing along almost on the expectation that a 10% rate will get done between the EU and the US. We're now hearing as part of that NBC conversation that Trump is considering 15 to 20%. Does that take the shine off the European rally?
It might a little bit on the margin, but our main reasons for being constructive on Europe and the euro really has to do with domestic policy in Europe itself. So the massive infrastructure plans and obviously also defense spending from Germany, which will run out to 2029, if not longer. This is a long-term structural change. Now, clearly, the tariffs, Europe is very export-driven, is not helpful. But the driver behind why we're positive on Europe really has to do with Europe pulling itself together, taking its own destiny in its own hands, and doing something about it.
And I like how you talk about them putting their destiny in their own hands. But, I mean, we see, of course, a lot of money being directed into defence spending.
Yes.
What sectors stand out to you in particular?
So, the European market is, in a way for investors is fundamentally less attractive than the U.S. from a sector point of view. There's no Magnificent Seven in Europe. You don't have the same technology giants which are generating really remarkable profits. So you have to talk about banks, you have to talk about healthcare, you have to talk about, luxury goods. Those are fine, but really what we're excited about is this idea that potential growth in Europe can improve on the back of deep infrastructure spending. But we also need to see, which is very, very difficult to deliver, but labor productivity gains. European labor productivity is low compared to the United States, and that has to be adjusted.
Okay, and in the interim period, what else is standing out to you? I see you've got quite a bullish call on gold.
Yeah, so we're looking for 36.50 on 12 months, which is around about 10% or so from thereabouts from the current level. Gold is in an environment where you have rising U.S. inflation expectations, to fear that gold will drop a lot seems unrealistic. So in a portfolio context, have your 5% gold allocation as the hedge against inflation should be quite okay.
What's the risk then about stagflation, though,
Yeah.
and what happens if that becomes entrenched?
Okay, so we've had the one big beautiful bill that, first of all, that basically takes any recession risk off the table. This is completely unrealistic. You're going to get a nice fiscal push, not a lot in 2025, but in 2026, quite a substantial increase in U.S. GDP as a result. So I would say, but then of course we have the tariffs to deal with as well, and all the complications with that. Stagflation risks are there. In recession risks, hardly any. That's our baseline view.
How do you feel about the US exceptionalism story, not just for the remainder of this administration, and there's still a fair way to go, but, sort of ongoing? How much impact do you think on the long term does it have, even if we assume that maybe, half of what President Trump says doesn't materialize?
Yeah, that's a very, very difficult question. There's certainly been a lot of chatter in the market more recently about, the declaration that the death of U.S. exceptionalism is wrong, and then there's a room for a rebound. The longer that these policies stay in place, which is anti-free trade, anti-globalization, you're going to get a consistent movement of global investors diversifying their exposure from the U.S. to other markets. I'm not saying they're going to dump everything, especially when you think about the earnings generation of something like the Magnificent Seven, which is truly unique and truly American. But on the margin, you're going to get a lift in the euro, for example, maybe also the Aussie dollar, maybe a little bit on the Swiss franc and so on. Investors are looking for alternatives for sure.
Stefan, thanks so much for joining us this morning. That was Stefan Hofer there, Chief Investment Strategist at LGT Private Banking Asia. And as we've been discussing or speaking, we actually just got the yuan reference rate coming through, the strongest one we have seen going back to November of last year. But it's 7.1475 per US dollar. The estimate had been for 7.1781. But we'll get more context on that just ahead. You're watching The China Show, and this is Bloomberg.
Take a look at what we're watching across Greater China, of course. The overlay to all of this are these new trade threats from President Trump, be it some of the remainder trading nations or these new levies announced when it comes to Canadian goods. But we're watching a number of things, including, of course, we know that Foreign Minister Wang is in KL. He's potentially looking for that meeting with Marco Rubio as well. Lots to discuss there, from trade to Beijing's position on China. We're also watching Chinese stocks as that valuation gap is starting to close between offshore and onshore. This is the CSI 300 nears its highs of the year. We also had that yuan fixing, which was also the highs of the year as well. Also looking to some of these Huawei suppliers, of course, the chip restrictions continue to be in play when it comes to the White House. Crypto also seeking that revival. We're seeing some pretty lofty gains as well as some pretty lofty goals when it comes to options traders at the moment as well, Belle.
Yeah, that's right. We can actually take a quick look on crypto stocks in a moment. But in the interim period, just having a look at what we're expecting ahead of the open this morning, we are seeing fairly flat tech, a little bit under pressure so far today as well, looking like it's going to open in the red. But the big question marks really around, are we going to be seeing any further support for the property sector? Also, the trading gap that we're seeing between A and H shares, another focus for us. But let's take a look, as you mentioned, at those moves we're seeing in crypto, because Bitcoin has hit 116,000 for the first time ever for that token. Of course, it's that big thing that investors seem to be looking past all of these trade risks, also going into those more risk-sensitive areas of the market. And we have seen names like Huobi, for instance, gaining very steadily over the past few sessions. Property stocks, as we said, we are seeing this expectation that we're going to see more support from the Politburo, perhaps some fresh stimulus measures at the upcoming meeting in July. But yesterday, a very strong rally to close the session, looking like it'll extend as we get the open in about 3 minutes from now. But you're watching The China Show. As we said, the open is next, and this is Bloomberg. Welcome back. You're watching The China Show this morning, and we're counting down to the open of markets. Look, we had a bit more sort of risk-on mood coming into the session, but just as we came into the show, President Trump was back on his social media. He was also speaking with NBC about this prospect for further tariffs, perhaps a blanket rate being applied to a lot of trading partners, up to 20%. And so that sort of poured a little bit of cold water over sentiment, and you're seeing that reflected, I guess, because China's futures, Hong Kong, looking to open relatively flat.
There was a moment there where I thought it was going to be a quiet-ish end to the week this Friday, right? But I don't know what we were thinking. Uncertainty remains the only certainty when it comes to the news flow these days, when it comes to trade. But yes, take a look at what we're watching when it comes to the start of trading across Greater China. And as Belle mentioned, it's interesting. We've seen Jamie Dimon might say it's complacency when it comes to that tariff impact playing out in these markets. But so far, that resilience starting to look a little shaky when it comes to the Asian session. Stocks broadly across the region just losing momentum, strengthening strengthening the dollar, some of those haven plays there after Trump suggested higher blanket tariffs on most trading partners, plus the moves when it comes to Canada. This is a picture when it comes to the commencement of trading across the Chinese markets. We've also seen Chinese stocks, onshore stocks, that is narrowing that gap with Hong Kong as some of these policy bets grow a little bit stronger. There are some signs finally of a catch-up from onshore stocks as these valuations, some optimism over policy support. This, though, after we've seen that lag compared to Hong Kong stocks by the most since 2008. So potentially a little bit of momentum when it comes to trading in Shanghai and Shenzhen, but today may not be the day that we see that. When it comes to trading in Hong Kong, though, muted upside, about 0.4%. Tech looking pretty flat. MSCI China up by about 0.4% there as well. Crypto is one element that we are watching very closely, given that we have seen that sort of resurgence rally when it comes to Bitcoin extending the record run. Options traders now looking at around 120 strike prices, 115,000 as well is part of that, as crypto more broadly, not just Bitcoin, a number of the other tokens extending what has been a real resurgence in that rally, partly being fueled by institutional demand, partly rising kind of demand from treasury companies, crypto treasury companies, I should say as well. Something of a validation for these sort of long-suffering crypto bulls. But, Belle, also quite interesting that we're starting to see that kind of re-correlation between equities and crypto now.
Yeah, and I'm actually just taking a look at Huobi and how it's really performed this week. I mean, it's a gain of more than 30%. So it does tell you that at least some traders are very bullish on the outlook for cryptocurrencies. But in terms of what we see as well, that divergence between A and H shares, actually Chinese equities are showing signs of catching up after lagging their Hong Kong peers by the most since 2008. Our Asia equities reporter Charlotte Yang is with us. And you've been looking into this trend. So what are you seeing?
Yeah, so after the first half of lacking momentum, it seems like the Chinese onshore markets finally getting some of that mojo back, at least for this month. So you're looking at the CSI 300 that's set for the third consecutive weeks of gains, now trading near a high this year, and also market turnover on a monthly basis has also been improving. So there are a few things that have rekindled investors' interest for the onshore market. So you have the Chinese authorities talking about curbing those aggressive pricing competitions and also potential overcapacity in key sectors such as solar. So solar shares have really been rallying, so as some investors hope that this will help improve their profitability. And also heading into the July Politburo later, there's more attention in terms of on the policy messaging front. And also on Hong Kong, after a pretty strong run this year, the valuation appeal has come down a little bit, and also the narrative has changed. So before it was all about AI and also new consumption still going, but for AI, because of the pricing competition we're seeing in the quick commerce sector and the food delivery sector. So basically now the talk about Alibaba is no longer about the DeepSeek. That potential is now about what that means for the margins and profit.
Is there sort of really that optimism when it comes to property stocks, right? There's been sort of the awaiting for big bang policy measures for a while now. Is that still in play?
Yeah, so I think there was a lot of fast money that poured into the Chinese property sector yesterday, which caught a lot of people by surprise. There was this unverified social media, some unverified social media reports talking about how we might have a high-level meeting attended by top leaders in China that could be reminiscent of the 2015 Central Urban Work Conference, and that essentially giving more support to the property sector. So that has kind of triggered bets that we'll be seeing more of those shantytown redevelopment playbook playing again. But we have to remember that those property stocks, the penny stocks, the outsized movement, and I think overall the broader market has been quite restrained in terms of pricing action. I think that shows the skepticism of that of those unverified reports. But I think going forward, what's quite important is to see, because before I think the investor expectations heading into the Politburo meeting is still quite low, given that they think China is on track to reach its annual GDP target this year. But if we see more kind of these, speculations and rumors going around, let's see if broader market, if they add more, probably that shows investors have high expectations going into the key meetings later this month.
Right, that was our Asia equities reporter, Charlotte Yang there. Thanks very much for joining us. And let's get more on this now. Bring in Alicia Garcia Herrero, Chief Asia Pacific Economist at Natixis. And Alicia, I mean, I think even if that was sort of fast money yesterday moving into the property sector, I'm taking a look at the Shanghai Securities News, for instance, today, and they're still saying that there could be more stimulus to come in the second half. What is your expectation around that, and what's your expectation as well for the Politburo meeting?
Yeah. So we've been actually expecting for quite a while stronger stimulus in the second half, because the first half, and we're going to see that loud and clear today, is actually very positive for China. We were expecting much worse export data than we've seen for the first half of the year. And that's true even for June. So we're going to have a good GDP number. But second half of the year, that's where, in a way, things could really get worse, both in terms of exports, but also in terms of the whole sentiment. You know, so because the second half of the year is expected to be much worse, I think they need to stimulate further. They have started already. It's just a question of how much more they will do.
But I think obviously what complicates this is just not knowing exactly how these tariff negotiations are going to go. And you've got that deadline, of course, for August. I mean, sort of that positivity you talk about in the first half, is that more just the front-loading effect as well?
Yeah. It's the front-loading, and it's the fact that Liberation Day ended up very, in nothing, only on the 9th of April for all of the rerouting that China has been playing around. So now you know the rerouting will be much harder, second half. So that's going to hit Chinese exports indirectly. So that's why second half is tougher, and the government has been preparing. I think they're going to announce more on the monetary and fiscal side. Fiscal, we know they've been issuing now. By now, the fiscal stance in China is at least neutral, if not positive. It was negative throughout 2024. So we already are in a stimulus phase. But it's going to be more so that they can hit the target, which is not too far, I have to say. First half was so good. So they just need to do more, but not like a big bang. I am not expecting a big bang. It's just more of that, more of what has been sustaining the economy so far. Yeah.
Is sort of more of the same enough when it comes to boosting animal spirits? How do you gauge those, particularly, both in terms of investment, business sentiment, but also households?
Yeah, I mean, I'm not expecting much on households. We actually looked in detail into the issuance so far, first half of the year, and it's all into infra. That's what's happening. It's not household support. The household stimulus package, which is basically vouchers, is around 41 billion equivalent US dollars. It's very small. So don't expect a big change in consumption. That's not what's going to drive growth in China this year.
What is sort of the longer-term risk when it comes to the deflationary mindset for China, right? Because I think part of the concern is that perhaps big enough measures, particularly when it comes to direct-to-consumers, haven't really come through. How easily is this sort of mindset entrenched, particularly when it comes to the consumer?
Yeah, so there's three sources of deflation in China, which we know. Real estate, and I think that's why they're kind of already thinking, look, demand measures are not enough. We need to support developers. There you go. That's what we see, in the market only recently. And that might ease because they're going to support it. I think they realize that these deflationary pressures can't last. The second one is obviously overcompetition. They're dealing with that. But the third and most difficult one is consumer support. I mean, changing their mindset about consuming and paying higher prices for consumption. It's not only consuming, it's about the prices that Chinese households are ready to pay. And those prices come down every month. So to change that, I think that's the hardest part. And it's going to really take a massive change in sentiment. I don't know where this is going to come from. It would need structural reform, which we're not seeing.
But point 2 and 3, is that sort of linked? Because if you've got companies that are cutting prices, consumers expecting to pay less. I mean, it seems to be linked to the involution trend. And we are getting signs now that China is taking this maybe even more seriously than before. So what would we expect then on that front?
Yeah, it will help. You're right. But I'm not sure it's enough, because a lot of the lack of consumption and even, the ability to pay higher prices is related to the general outlook. I mean, what do you expect from your wage income, from your financial wealth, And that is not yet changing. Yes, we might see a little bit of a better Shanghai Composite Index, but before we say, wow, the market is booming, let alone real estate prices, there's a long way to go. So the third pillar for deflation to disappear in China is yet to be pushed. I think we're not yet there.
Okay, so then again, what does get us there? Well, what are you expecting?
So what I'm expecting is that China's unbalanced growth will continue. That's what I'm expecting. And, some may not like it.
But how does that then factor into their conversations with the EU, for instance?
There will be hardly any conversation. I call it a non-summit, so that's as bad as it gets. It's only a one-day visit by now. Xi Jinping may show up for a while, but there's no real there's not going to be a communique or anything that really improves those relations. So the EU is very wary of all of this kind of lack of consumption, overcapacity. Even if measures are taken, I think China still needs to export its way out. That's clear.
Yeah, I guess that's that big question, though, is how long can they continue to export their way out when you've, of course, got those deteriorating relations with the EU and then the global south as well?
Yeah, but frankly, I think they can for a long time. Let me tell you why. It's very simple. If you're Lula and you hear what Trump is telling the world on CNBC on Bolsonaro, your dependence on China will only increase. You see, so it's all about how bad Trump may treat anybody else. And this is true for the EU as well. The EU might not get in a deal with China, but they may not impose any additional tariffs because the US is pushing them not to do so in a way. So I think it can go for a while.
All right, that was really great. Thank you so much. That was Alicia Garcia Herrero, the chief APAC economist at Natixis, and we'll have plenty more ahead. This is Bloomberg. Taking a look what's happening this morning with the currency space. Of course, a lot of that focus and attention has been on what's happening with the Canadian dollar. The loonie has been sliding this morning after President Trump said the US is looking to impose a 35% tariff on Canadian products starting August 1. So we have seen a lot of reaction to that in the markets. Also watching other currencies, those are more trade-sensitive ones to the US, including the Mexican peso there you can see likewise under pressure. But sticking with Canada, because the foreign minister says she's looking to build free trade agreements with Southeast Asian countries. Anita Anand spoke to us at the ASEAN meetings in Kuala Lumpur. This was before President Trump announced those plans for a tariff on Canadian goods.
We are a Pacific nation ourselves, and I am here, the Carney government's first visit to the Indo-Pacific, my first visit to the Indo-Pacific, to stress the importance of multilateralism. Multilateralism in trade and economic matters in particular. We need to ensure that we are building resilient supply chains, that we are diversifying, and we are establishing those trade relationships. We are currently negotiating with ASEAN a free trade agreement, and we look forward to the conclusion of those negotiations. In fact, I'll be meeting with the negotiators today, as well as members of the business community, because we have to remember that there are numerous stakeholders, businesses on the ground in ASEAN and in Canada who will benefit from this free trade agreement when it is finalized.
So how long can we expect? When will this thing be signed? And also, Canada already actually have pretty robust agreements with Asian countries. So how much more can this agreement actually push for expanding trade with this region?
You are exactly right. We have trade agreements that are very versatile and very robust with multiple regions and countries throughout the world. In fact, we're the only G7 country that has a free trade agreement with every other G7 country. But given the stress in the global economic environment, it is necessary for us to do more. And that is why this free trade agreement between Canada and ASEAN is so very important. We will be continuing to work with alacrity to finalize the text of that free trade agreement to ensure that those resilient supply chains for the benefit of business and other stakeholders continues to occur.
Let's talk about some of the sectors that has been hit by sectoral tariffs from the US. So autos, steel and aluminum, these are sectors where Asian countries are also exporting the same products. So Asia is not likely to absorb the kind of supply from Canada. If you are reducing reliance from the US, where else will you look for market for those products?
So those tariffs are hitting us as well, and we believe they're unjustified, and we're engaged in complex negotiations with the United States to address the tariffs and to ensure that we can come to an agreement. On the subject of ASEAN countries and Canada, what we want to do is to continue to support multilateralism, to continue to show the world that as there is global stress in the geostrategic environment, Canada is a partner that will always show up to open the doors to trade, to open the doors to free trade, to open the doors to multilateralism.
Canadian Foreign Minister Anita Anand speaking with Bloomberg's Min Min Low in Kuala Lumpur. Taking a look at some of the corporate headlines today, and Nvidia's CEO Jensen Huang has met with President Trump at the White House. But sources who confirmed that meeting did not reveal details of what was on the agenda. It comes days before Huang is expected to make a trip to China. Nvidia's CEO is a frequent visitor to the mainland and has been vocal about the need for US companies to access the world's largest semiconductor market. JP Morgan is considering cutting the weight of top bond issuers in its key emerging market index, including China and India. Documents seen by Bloomberg show it's gathering client feedback on changes to the benchmark, which guides over $200 billion in funds. The proposal includes lowering a cap on individual countries from 10% to 8.5%, which could increase the average yield of the benchmark.
Well, the billionaire Richard Lee's talks to expand his insurance business into mainland China are said to have stalled. Sources say that's after his father, Li Ka-shing's company, moved to sell global ports, including two in Panama, to a group backed by BlackRock. That deal triggered high-level anger in Beijing. FWD made its trading debut in Hong Kong on Monday after a $446 million IPO. TSMC shares are little changed in Taipei this morning. That's after revenue jumped nearly 40% in the June quarter, beating analyst expectations. Based on its reported monthly figures, the chipmaker sales climbed to $32 billion for the three-month period. That's adding to hopes of a sustained boom in AI spending. TSMC's CEO said last month that AI chip demand continued to outstrip supply. And I think these results are actually really interesting to watch also from more of the currency angle, because it's been, of course, a period where we've seen really rapid moves in the Taiwanese dollar. And when you take a look at what analysts are saying, they're saying that sort of ended up presenting a 5% headwind to the results that implied that actually the results could have been a bit of a beat on what analysts had been expecting, but in the end, I guess, roughly in line, but still positive on the outlook for AI spending.
Yeah, it's interesting when you take a look at sort of some of the unforeseen implications of things like currency that played into this number, right, as you mentioned, but that sort of 39% rise amid the AI spending boom. And I suppose the question is really how much further along could we see that really continuing, and how much more runway is there? Also, the spending side's been interesting as well. That pledge to spend $100 billion ramping up manufacturing. But a lot of that uncertainty really kind of depends on what we see between the US and China and how that sort of broader supply chain picture plays out as well. But, Belle, it's been quite interesting that we've seen a lot of investors kind of piling back into the AI adjacent play as well, right? After the kind of, DeepSeek perhaps derived doubt over valuations and the amount of investment that we've seen, there has been something of a recovery.
Yeah, that's right. I think it's that idea that we had DeepSeek. It was the concern around would it mean less demand for compute power. In the end, it just seems to be more applications of AI and the sort of proliferation of the technology instead. So still supportive for stocks like Nvidia. And, of course, this week, that milestone of entering the $4 trillion club for the first time ever, or touching that mark, and the first one to do that as well. But taking a quick look at how Asian markets are trading in the session today, because, as we've been saying, very headline sensitive, very sensitive to Trump's announcements on trade, but we have seen a bit of a reversal of sorts, and actually the Hang Seng improving nearly 1% as we head into the morning session. We'll have plenty more ahead. You're watching The China Show, and this is Bloomberg.
Tesla shares jumping on plans to expand its robotaxi service into California and Arizona after its recent rollout in Texas. CEO Elon Musk expects the robotaxis could launch in the San Francisco Bay Area in a month or two, pending regulatory approval. Tesla has also applied to operate in Arizona's Phoenix area, and a decision is expected by the end of July. Bloomberg has learnt that Chinese hardware giant Huawei is trying to export small quantities of AI chips to the Middle East and Southeast Asia. Sources tell us the company has reached out to potential customers in the UAE, Saudi Arabia and Thailand about purchasing its older generation Ascend processors. The move is part of efforts to establish a foothold in markets dominated by Nvidia.
Taking a quick look at the market action as well, because if there's one stock standing out so far today in the session, it is Xiaomi once again. But the headline here is that they've delivered over 300,000 cars in the last 15 months. That's according to reports from the company on social media. But what this means really is that the key pillar, or a key pillar for Xiaomi, is continuing to stay strong. It's all about devices. It's about cars and also home appliances as well. But again, that's the story there. Taking a look as well at what's happening with Wuxi AppTec here, because we've had their prelim first half net income and pretty strong there as well. So again, you're seeing that trading reaction in the session so far. Broadly in the session, the markets here are looking to do a little bit better actually. You're seeing that continued improvement, particularly in the Hang Seng. Watching what's happening in the Hang Seng tech space, again, more than 1% in the green. We'll have more context on why in the hour ahead. You're watching The China Show.
Welcome back to the China Show. Take a look at the HSI a half an hour into the trading session, and we're seeing some of that risk aversion really play out across Asian indices at the moment, with some of that concern over yet another trade missive from President Trump, this time targeting Canada, but also alluding to potential further trade action on some of these remaining trading partners that we haven't specifically seen sort of be isolated over the past few days or so. There's the idea of blanket tariffs between 15 to 20%. He name-checked the EU as well, which we know, of course, have been hoping for that 10% deal to be done. At the moment, though, we are still seeing quite a bit of upside when it comes to Greater China. The Hang Seng Index trading near those session highs. We're also seeing that gap also being gradually closed a little bit more when it comes to offshore versus onshore stocks, Bill.
Yeah, I really just, it's just whipsaws, I would say. We get the sort of immediate reaction to the tariff headlines, and then it's sort of traders shrug it off once again, and we're seeing that really being reflected in the sentiment today, because we did actually see the broader index giving up its gains, but again, we've started to trade higher once again. US futures, though, are still a bit in the red, and we're watching, of course, some of those key markets. The Nikkei, for instance, under pressure here. Taiwan, fairly flat after we had those TSMC earnings. But again, that big focus on what's happening with the dollar dynamics, given we did as well see that strengthening on these high tariff rates, and watching the Canadian dollar, because that has been weakening this morning. And the big headline is this, as you said, this imposed 35% levy rather on some tariff goods, or goods rather, from the country.
Well, let's bring in Bloomberg MLAV strategist Mary Nicola, who joins us in Singapore. Mary, we were just hearing from the likes of Jamie Dimon, worried about the complacency that markets have had in reaction to potential tariff implications. Can you explain this sort of dynamic, right? Because there does seem to be an underlying assumption that things won't be as bad as what previously markets thought they would be, that perhaps President Trump would sort of back off. But we've had a couple of days of that rearing back up of aggressiveness.
Yeah, I think it really comes down to what we've been seeing in the data. So the data has really shown that the U.S. economy is actually holding up. And that's one of the reasons why you've seen equity markets continue to rally as a result of that. So you haven't really seen the cracks in the data just yet, which is why you can argue that the markets have tended to be a little bit more complacent. And then even heading into earnings season, the bar is set so low that you might actually see some upside as a result. So I think think in general, until you see the fundamental shift and the fundamental cracks in the data, then you can start seeing at least equity markets reacting. Until then, you're likely to see that complacency, especially when you're hearing that, for example, this morning, there's 35% tariffs, but then they're open for negotiation. So that sets the precedent of that the Trump administration can backpedal once again.
Where we are seeing, I guess, a lot of this really being reflected, though, at least that immediate reaction is in the currency space, and we're watching the Canadian dollar and the euro in particular this morning.
Yeah, absolutely. I think one of the key things that we've seen during this trade war is the reflection of how the FX markets in particularly react. So largely that has to do, given the breadth and depth of the currency markets, it's the first one to get hit. But what I did find interesting today is just the reaction that we've gotten from the CNY fixing and how that has been steadily showing strength despite what we've seen in the wake of all these tariff noise. But essentially what is going to be the reaction is that a lot of the currencies that are linked to the CNY are likely to benefit, but really under the limelight is going to be the Canadian dollar and the euro, and largely because we're still waiting on the final announcement on EU tariffs, and that could come within the next few hours or by Friday. So we still don't know. And of course, there was a lot of excitement earlier this week about a potential 10% tariff, but now with the idea of 25%, that's going to keep a lot of FX traders jittery.
Bloomberg Live strategist Mary Nicola there in Singapore. Well, geopolitics in focus when it comes to what's going on in KL at the moment too. The US Secretary of State is set to meet with his Chinese counterpart in Malaysia later today. This would be Marco Rubio's first face-to-face conversation with Wang Yi as Trump tariffs dominate these conversations in Malaysia. Bloomberg's China correspondent Min Min Lo joins us now from KL. So what are we expecting from this meeting?
Yeah, so the State Department announced this new addition to Marco Rubio's schedule earlier today. It appeared to be a last-minute addition, obviously a very highly anticipated one. It tells us that perhaps the temperature between U.S. and China is warming up a little bit because the two men, Wang Yi and Marco Rubio, had a chance to meet face-to-face in New York in February, but they didn't use that opportunity. This time, they are finally agreeing to their first face-to-face meeting. Of course, we are wondering whether or not they will be discussing a potential Trump trip to China, but Marco Rubio didn't mention that. He said top of his agenda is Russia. He said China has been providing as much help to Russia as possible without getting caught. That's something they want to talk about, and it comes ahead of President Trump's announcement on the coming Monday, potentially announcing new sanctions on Russia. There's also the question of whether down the line we will be getting secondary sanctions on countries like China, which buys a lot of oil, LNG from Russia. So that's the big question. Of course, there are a lot of trade issues to discuss as well, though that's not under the portfolio of Marco Rubio. Scott Bessent has said that he will be meeting his Chinese counterparts in the coming weeks. But it does seem like relations are on slightly better track now, especially after the two sides agreed to keep to the terms of the Geneva deal.
Yeah, just on that point, we did have that Bloomberg scoop earlier this week about how there's these drone documents that are essentially drawing a line from China to Russia in terms of collaboration around UAVs. But the other sort of big sticking point, of course, is the relationship between China and the EU. And you spoke to the foreign policy chief as well. So what did you learn from that conversation?
Yes, Kaya Kalas gave us an exclusive interview here. Obviously, she's here to deepen ties with ASEAN countries. But I asked her whether she'll be meeting with Wang Yi, who's here at the same place as her, because tensions appear to have been escalating after Wang Yi's recent trip to Europe, with China imposing new anti-dumping duties on some European products. And she said that she's not going to meet Wang Yi. She says she doesn't see any potential for forward movement on trade. And the only thing really that both sides really really agree on, where they have common interests, is climate change. And she confirmed that the EU-China meeting or summit is only going to be one day, and there will be no business delegation who will accompany Ursula von der Leyen. But I also asked, actually have a listen first to what Kaya Kallas mentioned when I asked her whether there is double standards being applied in response to China's assertion that the EU has been providing its own subsidies to its producers and manufacturers.
Our subsidies are in accordance with the WTO rules, so this is very, very clear. We want a level playing field. We are very worried about the economic coercion of China, and we are also worried about their enabling Russia's war in Ukraine. So these are the two big issues we have.
So a couple of sticking points there. Russia, economic coercion. I asked Wang Yi as well whether or not that EU-China summit is being shortened, and here's what he said.
Will the upcoming China-EU summit be cut short?
No, there's no such thing.
There is no such thing. I wouldn't really say that this necessarily contradicts our reporting, because initially we heard from sources there was going to be a leg of that trip in the EU-China summit that goes to Hefei, a place that is near to Shanghai. We heard that that was going to be cut short. But bear in mind, China hasn't officially announced that this summit is even going to happen. We are expecting China to announce it only when the final details have been really set in stone. So he's saying that there is no such thing. It's not being shortened. But again, it shows you that EU-China relations really not in a good place right now.
In terms of some of the other bilaterals that Wang Yi has held with other ASEAN partners, what was the messaging here?
Yes, Wang Yi held a meeting with the Vietnamese foreign minister, and this was quite surprising because Vietnam is one of the few countries in Southeast Asia that had already signed the agreement, the tiered tariff level with the U.S., 40% on transshipments. And given that China has warned that any countries that sign a deal that undermines Chinese interests will face retaliation from China, I was expecting to hear perhaps some warnings from China, but the tone actually was pretty constructive. Wang Yi saying that China is willing to work with Vietnam to ensure that the legitimate interests of all countries is being safeguarded. So pretty positive on that front. He also met with the Japanese foreign minister as well, and also some positive momentum. The Japan envoy did urge China to ensure that Japanese companies will have access to rare earths, but they agreed as well to work towards the resumption of beef exports from Japan to China, and reaffirmed that the seafood ban on Japan will be lifted as well.
That was Bloomberg's Min Min Lo there for us from the ASEAN meeting in Kuala Lumpur, and we'll have more ahead on the China show. And one of the key issues that China, of course, is facing, this effort from Beijing to curb their overcapacity in key sectors. How they're falling short on that front is what we'll get the view from Goldman Sachs just ahead. This is Bloomberg. Well, Bloomberg's been told that Nvidia's Jensen Huang has met with President Trump at the White House just days before Jensen Huang plans to travel to China. Our chief North Asia correspondent Stephen Engel joins us with the latest. So it's obviously the timing around this, you can't overstate the importance, but what would he hope to achieve just as he, of course, heads across to China?
I think this story is pretty easy to draw conclusions on what is being talked about in the White House. And reporters say they saw him enter the White House just before 5 a.m. Hong Kong time, so 8 p.m. East Coast time. So that was about 5 hours ago. It's either a very long meeting with Trump or it's already concluded. And we don't necessarily have any lines coming out of the White House yet as these two gentlemen meet ahead of Jensen Huang's trip to Beijing, where he's going to be meeting with the Commerce Minister, as well as we're hearing He Lifeng, who's leading, of course, the Chinese delegation on trade talks with Trump. So I'm sure he's going to get a briefing from Trump, or Trump's going to give him a briefing on what exactly he can do in China. Jensen Huang, you've met him several times. I've met him as well before. He is adamant right now that these export controls are essentially giving an unfair advantage to his chief competitor in China, Huawei, and that they're losing out billions of dollars potentially in China as well. They're also readying, of course, their next chip to sell into China. Whether he's getting verbal approval to do that, we don't know. But apparently this next generation of the Blackstone RTX or RFX Pro 6000 due to be available as early as September to sell to China, which would be a replacement for the H20, which was originally sold to China, but then banned by the Trump administration. So they're trying to find which technologies in the chips are going to be accepted under the Trump administration's export controls that also don't necessarily need very arduous licensing approvals from the U.S. government.
We're also learning that Nvidia's top Chinese competitor, Huawei, is trying to make inroads, perhaps small inroads, with its chips to the Middle East and in Southeast Asia as well.
Well, that makes sense, doesn't it? So the sources who are telling us this, we already knew prior that Huawei had potentially tried to work or has done a deal in Malaysia, only for authorities in Kuala Lumpur to sort of downplay that. Now we're hearing that Huawei is trying to make inroads in selling its lower generation AI accelerators or processors to the places like the United Arab Emirates, Saudi Arabia, as well as Thailand. We don't have confirmation necessarily, but it makes sense. We sure do know that Huawei has global ambitions, and those markets, though, are absolutely dominated by Nvidia for those kind of high-end AI chips. So if this is true, it would be it would make sense, wouldn't it, that they're trying to look for markets where they feel that they can get a little bit of traction, and then as they ramp up. We all know Huawei does not have the advanced chip production numbers like an Nvidia or AMD, others. But what we do know about China is they have the absolute ability to scale to volume when they need to, and when the technology is there, and when they have those customers. So they're looking for customers right now.
Chief North Asia correspondent Stefan Ingles there. We do have plenty more ahead. This is Bloomberg. Or just generally.
Welcome back. You're watching The China Show, and some of the big headlines that we're tracking this morning. Ukrainian President Volodymyr Zelensky says he's optimistic that the US will ramp up military aid, including air defense technology. Zelensky says he had a positive dialogue with President Trump over the delivery of Patriot missile batteries. He was speaking at a conference in Rome that was slated as a discussion on Ukraine's post-war recovery, but instead focused on repelling Russia's ongoing attacks. Israel says it's giving the US a 60-day window for diplomacy to remove what it calls the Iranian nuclear threat. Prime Minister Benjamin Netanyahu says on X that should the negotiations fail, the objective will be attained through other means. Israel launched a 12-day war against Iran last month aimed at stopping Tehran's nuclear and missile program, with the US launching its own strikes in support. And Israel reportedly believes that some of Iran's underground stockpile of enriched uranium survived last month's US and Israeli attacks. The New York Times cites a senior Israeli official saying some of the material may still be accessible. The same official says Israel has uncovered a secret Iranian project to build a bomb late last year, evidence which has been shared with Washington.
Australian Prime Minister Anthony Albanese heads for China tomorrow on a mission to boost economic ties whilst navigating opposing security interests. Our Asia-Pacific economy reporter Swati Pandey joins us now. Let's start off with the economy, which has, the economic relationship has meaningfully improved since the tensions of the past few years. What's going to be on the table?
So definitely the trade relation, they are going to be companies, delegation of companies, including iron ore miners and banks. So BHP Billiton, Fortescue, HSBC, and Macquarie, they are all traveling with Albanese. There's going to be a CEO roundtable. There's going to be an international supply chain expo that China is hosting. So there's going to be a lot of discussion around the economic relationship and trade relationship, further boosting that. Probably something around trade agreement may come up as well. So we will definitely see a lot of headlines and press releases and discussions that will come up on that. Easy topic as well.
Yes, and I guess more focus on people to people, so-called services as well, given that obviously there's going to be a finite amount of iron ore that we can continue shipping, given the nature of the Chinese economy now too.
Yes, that is a concern, and Bloomberg did a story about how China was buying a lot of our iron ore to basically prevent volatility or price spikes in the country given their huge demand, and that is not good news for Australian miners. So definitely there will be discussions around that as well. It is hard to see anything major come out of that, but definitely there will be discussions around how that relationship can be deepened.
What about the security geopolitical aspects?
It's looking like this will be raised as well, and Albanese did a stand-up earlier a few hours ago, and he was asked this very question by journalists, and he did say that he will raise security and human rights issues with China. So there will be those difficult conversations as well. They will be behind closed doors, and it is quite possible that they will not issue any statements on those particular issues, but Albanese did say that he will talk about those.
All right, that was our Asia-Pacific economy reporter, Swati Pandey there. And, of course, as we prepare for Anthony Albanese, the Australian Prime Minister, to head to China, there is the ASEAN summit, or meeting rather, that's underway in Kuala Lumpur. And there we have seen China's Foreign Minister Wang Yi urging for cooperation and collaboration among Southeast Asians, and also opening or urging them to uphold their openness as well. And to that end, we've also seen efforts from Canada, and the Foreign Minister there saying that she's looking to build free trade agreements with Southeast Asian countries. Anita Anand spoke to us at the ASEAN meetings in Kuala Lumpur, and this was to note before President Trump announced plans for a 35% tariff on Canadian goods.
We are a Pacific nation ourselves, and I am here, the Carney government's first visit to the Indo-Pacific, my first visit to the Indo-Pacific, to stress the importance of multilateralism. Multilateralism in trade and economic matters in particular. We need to ensure that we are building resilient supply chains, that we are diversifying, and we are establishing those trade relationships. We are currently negotiating with ASEAN a free trade agreement, and we look forward to the conclusion of those negotiations. In fact, I'll be meeting with the negotiators today, as well as members of the business community, because we have to remember that there are numerous stakeholders, businesses on the ground in ASEAN and in Canada who will benefit from this free trade agreement when it is finalized.
So how long can we expect? When will this thing be signed? And also, Canada already actually have pretty robust agreements with Asian countries. So how much more can this agreement actually push for expanding trade with this region?
You are exactly right. We have trade agreements that are very versatile and very robust with multiple regions and countries throughout the world. In fact, we're the only G7 country that has a free trade agreement with every other G7 country. But given the stress in the global economic environment, it is necessary for us to do more. And that is why this free trade agreement between Canada and ASEAN is so very important. We will be continuing to work with alacrity to finalize the text of that free trade agreement to ensure that those resilient supply chains for the benefit of business and other stakeholders continues to occur.
Let's talk about some of the sectors that has been hit by sectoral tariffs from the US. So autos, steel and aluminum, these are sectors where Asian countries are also exporting the same products. So Asia is not likely to absorb the kind of supply from Canada. If you are reducing reliance from the US, where else will you look for market for those products?
So those tariffs are hitting us as well, and we believe they're unjustified, and we're engaged in complex negotiations with the United States to address the tariffs and to ensure that we can come to an agreement. On the subject of ASEAN countries and Canada, what we want to do is to continue to support multilateralism, to continue to show the world that as there is global stress in the geostrategic environment, Canada is a partner that will always show up to open the doors to trade, to open the doors to free trade, to open the doors to multilateralism.
Well, that was the Canadian Foreign Minister Anita Anand speaking with Bloomberg's Min Min Lo in Kuala Lumpur. And a quick check on what markets are doing here, because we're just about to go into the Japanese market break. One of the names standing out to us for probably the wrong reasons, but it's Uniqlo. This is the Uniqlo owner, fast retailing here. You can see that drop, but essentially their earnings have missed estimates, and that is down to weak sales in China. Also on another note is the crypto front, because we saw Bitcoin hitting $116,000 or $1,000 per token for the first time ever. We've seen a very strong run in crypto-linked stocks across the course of this week, but traders are still liking those riskier pockets of the market. We'll have more details ahead. This is Bloomberg.
It is 11:29 a.m. in Tokyo. Japanese markets are headed off to the break in just a minute. We are seeing some moves when it comes to dollar yen. At the moment, dollar yen rising just about 0.5%, sitting at around that 147 level. This as markets continue to really kind of recalculate the tariff of risk, with President Trump now threatening the 35% tariff on Canada, as well as mounting potentially as high as a 20% global tariff rate on other trading partners that haven't been spoken about at the moment. He's talking about letters sort of going out over the next day or so. So given that some of these partners, including the likes of Australia, have a current 10% tariff, this could be quite a severe escalation if that turns into 15 or 20%. So we're seeing some of that sort of reaction play out across certainly risk assets across Asia. But this is a picture as we see Japan heading off. A little bit of upside there when it comes to trading in the topics.
Yeah, and taking a look, as you said, cross markets, I think if there's any sort of consistent theme that we're seeing this morning, it is that story around dollar strength, and it's where you're seeing that biggest reaction really to this risk of further tariff and the jitters around that as well. But generally, we've kind of seen markets also fluctuating a little bit in the session, and today we're actually lifting up a little bit as we head through the session, though, of course, not too much conviction right now. But the MSCI Asia Pacific Index is up 0.4%, and we're seeing a lot of those sectors in the green, even if it's just by really a slim margin. But let's get to what is really one of the key issues that we see. And actually, just on that point around the trade jitters, we're getting some commentary coming across from the ASEAN meeting that's underway in Malaysia between foreign ministers there. But we're getting some commentary from Wang. He's saying that the US abuses tariffs. They undermine the free trade system as well. And so that is, of course, again, playing into the market dynamics this morning. It is a big question as well. How do those relationships play out between the US versus China, also their trading partners they're trying to work with as well, and how much flexibility are there from trading partners to take on extra Chinese capacity? And as we've seen, Beijing has been trying to tackle this problem. They've raised the threshold for green power requirements for China's polysilicon, steel and cement makers, as they are seeking to cut excess production in those sectors. A recent report from Goldman Sachs has found that the state of overcapacity in China is largely unchanged over the past year. So let's bring in one of the authors of that. Trina Chen is the bank's co-head of Greater China Equity Research and an analyst on basic materials and agriculture. So, Trina, I think the question is, this has been a long recognised issue in China. now it does seem like the needle is moving, though, for policymakers to take greater attention to this. What are we seeing exactly, and what can we expect to see on this front?
Yes, I think the disappointment in a sense that, in the past 12 months, as you mentioned, kind of this really analysis of the 7 global significant sector, the overcapacity changes, really comes from there has been very little discussion around the actual capacity, but a lot of work was about how do we provide a reprieve to the industry in terms of, you heard this week about anti-involution. That has been something has been discussed and been excised in the past 1 year. I think what we're seeing now is, number one, I think there has to be a recognition that around non-capacity kind of approaches, and that typically just temporarily provide a reprieve. It doesn't fundamentally change the problem. I think last week we have seen the central government committee meeting, and there is a hope, at least the direction of the travel of a policy is now there's a recognition about capacity exit, the scope of the anti-involution that could be widened, that could also actually touch on some of the capacity expansions.
But why do we see then the greater attention right now? Why is it becoming a bigger issue? Is it about trying to lift profit margins for businesses, or is it about trying to shift maybe a deflationary mindset that's becoming entrenched? Is it about negotiations between China and other trading partners? Why now exactly?
Well, I think it's a little bit of everything you just mentioned. But the top priority is perhaps, if you look at this industry, the biggest reflection of everything you're seeing is pricing. So we've seen big price deflation between 23 and 24. And from last summer, when some of the policy shift took place coming into this year, we have not seen fundamental changes. In fact, there may be some deceleration in the price decline. But fundamentally, the level of overcapacity has not changed. The degree of fragmentation has not changed. Competition remains intense. And to a certain extent, something probably negative is the difference between best producers and tail end of the industry also become less or narrower versus a year ago. So deflation, obviously, in the near term, in my observation, is one of the key focus. But in the meantime, you can also see discussion around the local government extreme incentives to capacity addition in their local administrative region, regardless of what happens elsewhere. And that has been, I wouldn't say the key drivers, but at least exacerbated the degree of overcapacity. We think there has been at least some discussion around that, hopefully actual actionable items follow up.
Trina, I'm glad you mentioned the role of local governments, because this is such an old playbook when it comes to economic policy making and industrial policy making for China, right? Like, it's not new, and in fact, it's not the first or perhaps even second time that we've seen solar reach these overcapacity levels. Why does it keep happening? And is this just a fundamental sort of structural element in the way that industrial policy is set by Beijing?
Well, I think it's to a certain extent it's related to what is really driving the incentives or their KPI of these local officials. And for all these years, I think growth, GDP, those are very important drivers, despite we would say quality of the GDP is important. But having an advanced manufacturer setting up a factory in the local province and bring all the supply chain over, and having the future VAT income still is very attractive to local government. I think in the recent XS theory, which is a part CCP, one of their kind of official journal, they've also discussed how arbitrary and extreme some of this incentive and subsidy being provided. And for us analysts, when we look at this to a certain extent, when it happens, it actually changes, inflated probably the project IRR, where in a cycle as such, it actually still encourages some capacity addition. And we should step back and thinking, what do we need to see overcapacity being addressed? So if you have a growth sector, you actually do not need to see capacity exit. If you slow down your capacity addition, in fact, at some point you will be able to rebalance the market. And that's something we hope, I think we have seen cycles have done this work in terms of pricing, low margins. But if I think the local government issue is being addressed, I would say that could certainly facilitate deceleration of capacity addition and therefore accelerate the supply rebalance.
Trina, when it comes to EVs in particular for that sector, how much more adjustment and capacity consolidation do you see there?
Well, EV sector, I think, in our work, basically present probably one of the worst picture in terms of the profitability, fragmentation, and direction where it's actually going. And I think we have all seen the price competition this year has, certainly surprised many of us after all these years changes. In fact, despite of all that, we actually still see EV sector have sizable capacity expansion plan, despite all these changes. So I think the sector itself now is not only a factor of capacity utilization, but it's also a factor is intrinsically now it looks a lot more fragmented than a lot of other sectors. There is no defined, really clear leader in terms of profitability, such as we can see in the lithium battery sector. That's actually quite different. So this is a sector, in our opinion, with a very, very steep kind of a cost differentiation, especially the tail end the producer is now deeply in cash negative. And with, I think, the supply-demand balance it is now, we would call it is probably most prepared and most in need of consolidation. Catalyst-wise, my sense is one of the key things we have seen sort of elevated the sector or temporarily supported the sector was the trade-in program that started last year. And the magnitude of this pull-forward demand could be as much as 15% plus. We don't know when the trade-in program will taper off, but when it does, we think it will serve as a catalyst for a down cycle that is truly needed, actually, to get the sector at least back to cyclical rebalance.
Trina, that was really fascinating. That was Trina Chen there, co-head of Greater China Equity Research and China Basic Materials and Agriculture Analyst at Goldman Sachs. And coming up, we'll take a closer look at Vietnam's economy and how it's been caught in the crossfire in trade tensions between China and the US. That report by our team at Bloomberg Originals is next. This is Bloomberg.
Vietnam's trade deal with the US includes a 20% tariff rate, but also gave it a first-mover advantage in Southeast Asia. Bloomberg Originals has been investigating why Vietnam needed to secure a deal now. Take a preview.
A land once devastated by American bombing now accounts for half of Nike's global shoe production. Hundreds of other American companies and their suppliers have manufacturing bases in Vietnam too. As the Southeast Asian country's annual GDP climbed, exports to the U.S. grew. Now, Vietnam is one of the countries most dependent on American trade.
The United States is Vietnam's largest export market.
Vietnam's massive trade surplus with the U.S. has made it a key target for Donald Trump.
The problem is they charge us 90%. We're going to charge them 46% tariff.
If Vietnam were to lose access to the American market, that would have a profound effect. It would ripple across the economy.
Which is why this was imperative for the Vietnamese government.
President Trump says he's reached a trade deal with Vietnam following weeks of intense diplomacy between the two nations.
Unlike military conflicts, trade wars are at least fought without bloodshed. But they can still do damage. And even with a deal, the economic relationship between the U.S. and Vietnam faces an uncertain future. Manufacturing is the lifeblood of modern Vietnam.
It is now a major player in the global supply chain. It is making everything from Apple iPads to Samsung smartphones, Nike shoes.
But Nike is just one of a long list of apparel companies manufacturing in Vietnam. Lululemon, Adidas, Abercrombie, and others source huge percentages of their products here. Since the turn of the millennium, global brands have reshaped the appearance of provinces like Dong Nai, where clusters of factories now produce and export everything from T-shirts to specialized machine parts.
Exports in general represent about 90% of GDP. It's absolutely critical for the growth of the economy, of lifting people out of poverty.
And after the last American troops withdrew in 1973, there was a lot of that.
Post-war Vietnam was one of the world's poorest countries. It had been drained of resources after years and years of war.
Vietnam suffered significantly under collectivism in the 80s, and because of the fall of the Soviet Union at the same time and bad economic policy, it had to reform.
The government began to relax its control of the economy and created policies to attract foreign investors.
That included tax incentives, building out the right infrastructure that these companies wanted, and generally having a very open attitude to global manufacturers looking at Vietnam.
Bolstered by the country's cheap, hardworking, relatively young and educated labor force, as well as political stability and proximity to China, the strategy worked. More than $600 billion of foreign investment has flowed in since 1988. Exports have surged, and as we've heard, now make up about 90% of the country's GDP. As much as 30% of those land in the U.S., making America's trade deficit with Vietnam its third largest by country, behind only China and Mexico. And that imbalance has only grown since the first Trump administration, in part due to policies enacted then.
During Trump 1.0, Vietnam emerged as the biggest winner of U.S.-China tensions. Vietnam became a place that investors gravitated towards to tap into the U.S. market, where the arbitrage between tariffs in China versus Vietnam became wider.
This was part of a hedging strategy known as China Plus One, where companies began relocating some production to Vietnam to avoid tariffs slammed on Chinese goods.
A good example could be footwear, where the global economy continues to depend on China. Vietnam is a key alternative to that.
Jung Min Khoi is a manager at Yangcheng Wooden Industries, which makes and exports wood furniture to the U.S. He remembers the impact of Trump 1.0 well.
Thì đồ gỗ của Trung Quốc chịu đánh thuế 25%, trong khi Việt Nam thì chưa chịu đánh thuế, thì các khách hàng của mình và các khách hàng của bên Mỹ họ chuyển rất nhiều đơn hàng từ Trung Quốc vào Việt Nam.
Trump 2.0 is very different in that instead of targeting China alone, which Vietnam benefited from, we're now seeing tariffs on Vietnam itself.
Vietnam's government anticipated some sort of tariff from the Trump White House. They did not anticipate a 46% tariff. They were shocked, to put it bluntly.
Liberation Day.
The impact of the announcement was immediate.
97-98% cái hàng của mình sẽ xuất đi Mỹ. Nếu mà thông thường thì nhà máy của mình có thể sản xuất được 250 đến 300 container một tháng.
He says now that's down to as few as 100 containers a month because of reduced demand. This will likely have a ripple effect on communities around manufacturing hubs.
You could see factories laying off workers. You could see plants perhaps shutting down.
Vietnam isn't alone in facing these effects. What sets it apart is the potential scale of them. It's one reason the government has responded so proactively.
They were one of the first governments to reach out to the White House and say, hey, let's start talking. The officials have repeatedly said we will buy very big ticket U.S. products, such as aircraft, LNG, anything that will help reduce the trade gap.
The tactic appeared to work, with Trump announcing the two sides had reached an agreement.
Giving full market access to American companies while slapping a 20% tariff on all Vietnamese imports.
One of the biggest sticking points in negotiations was a U.S. demand for Vietnam to get tougher on trade fraud and do more to prevent Chinese goods being rerouted and repackaged through Vietnam to skirt higher tariffs.
And that's exceedingly difficult for Vietnam because so many of the factories here, they rely not just on components, not just on material, but they rely on machinery that comes from countries like China.
It's like asking Mexico to stop having a trade relationship with the United States. While the U.S. is the biggest market for Vietnam, China is its most important geopolitical consideration. China sits on top of Vietnam. It has a very complicated relationship. The last war that both countries fought was actually against each other. That is a relationship it has to be most delicate about and is the forefront of its consideration in foreign relations.
Over the years, Vietnam has been able to navigate tensions between the U.S. and China through a strategy known as bamboo diplomacy.
Vietnam, like a bamboo, knows how to bend in the wind, so to speak. So when the winds are shifting, it knows how to shift along with it. They have learned how to dance between these big giants, between Washington and Beijing.
Vietnam must now repeat the feat, managing relations with two competing superpowers while preserving its export-reliant growth model.
Targeted measures are possible. And that is where Vietnam can find its sweet spot in order to appease the U.S., but at the same time maintain its key relationship with China.
And if you want to watch that right now, again, you can do so on the terminal or at Bloomberg.com. It'll also be available later on the Bloomberg Originals YouTube channel. And you can also watch us live on our interactive TV function, TV Go. You can also dive into any of the securities or Bloomberg functions we talk about and become part of the conversation by sending us instant messages. So check it out at TV Go. This is Bloomberg. Taking a look at some of the big movers in the session today, and the EV maker NIO is absolutely standing out for us here. You can see that pop, but what we've got is essentially the car releasing it, or the automaker rather, releasing a new SUV model that is seen as competitive. It's important, of course, because we were just speaking with Goldman Sachs about really the EV sector broadly being one that is ripe for consolidation and a lot of fragmentation, very, very competitive as well. So that's NIO. But let's also take a look at what's happening in the China brokerages space, because again, you're seeing some really sharp moves here. Is this something possibly that's related to the crypto jump that we're seeing? Because, of course, across the course of this week, you've seen a big rally in crypto prices, Bitcoin hitting $116,000. And we know that a lot of different brokerage units are either getting approval or at least seeking licenses in Hong Kong to offer virtual asset linked services. So that is the state of play there. But Heidi, of course, that big focus on what's happening with the rare earth stocks.
Yeah, sort of trade adjacent, right? One of those things we're watching quite closely. We're seeing, as you can see on your screen, really broad upside there when it comes to trading in some names, including Northern Rare Earth, other Asian shares tied to critical minerals, including Iluka and Lynas here in Australia as well. Following their US peers higher, MP Minerals securing that $400 million equity investment from the Department of Defence to build a new plant, $1 billion financing commitment from JP Morgan and Goldman Sachs as well. We saw that stock up about 51% 51% on Thursday. We're seeing that follow through here in Asia as well. Airlines are also in focus after Delta issued a strong earnings outlook, said vacationers are coming back as well. Better than expected second quarter numbers, restating that profit outlook for the year as well. So we're seeing broad upside when it comes to Asian aviation names. This is Bloomberg.